Hi guys, it's Ian Coleman. It is Wednesday the 12th of May, 9:40 in the morning in the UK. In today's video I want to talk about the Canadian dollar single currency. I've been wrong-footed on that one, but I'm still keeping my bias. Haven't really gone too far offside on dollar CAD because the dollar, the US dollar, not the Canadian dollar, is actually holding up. I'm hoping that we get more of a sustained move in that pair later on after the inflation figures. I also want to look at sterling, sterling dollar and sterling against the Australian dollar. We've got some interesting patterns forming there, and the single currency basket is getting pretty close to a resistance level. Now, I think the main focus today is going to be lunchtime. It's going to be the CPI figures. Inflation has been in the news, should we say, of late. It's a major concern for the market. We've got CPI, that's an inflationary figure from the US this afternoon, and I think that could be a catalyst for a move higher in the dollar. But let's get to the charts. Let's have a look at the Canadian basket to start with. Now, let's have a look at the larger time frames. I was looking at this time frame, which is the 4-hour chart, and here I could see a 5-wave count to the upside. I got a nice outside bar. I did start to move to the downside, but we've had this move higher. Now, if we go to this chart, this is why I'm really trying to catch this CAD trade, because I do believe that it's getting towards the end of its rally. There's a potential here for a completion of a 5 or a 5th wave. If we go to this time frame here, and I think this is all important, we've got a 361.8% extension level up here, 2720. Now, commodities and commodity-based currency pairs have a tendency to overextend to either 361.8% or 423.6%, which is up here. But if we note that level, 2720, when we go back to this chart here, okay, 2720 again makes a perfect butterfly formation. The reason I got wrong-footed is this pattern completed here. I then had, let's just get a cipher on, I then had this inside Gartley formation. So we did move to the downside, but we didn't extend. And basically, I've been greedy. I've held on to the trade. What's happened is we've moved down to this level and then we've pushed higher. So basically, a move up here to 2720 would then complete a butterfly in this pattern, 361.8% extension level on the 8 hours, and then a potential weekly completion of an Elliott wave pattern. So when I reflect that back onto dollar CAD, I'm going to talk about the dollar as well in a second. This is really what's tweaking my interest. So I've got this 5th wave, what I'm looking for to be a 5th wave count at 120.98. So I'm looking for that to hold for a decent, and I mean decent, move to the upside. I mean, I'm looking for at least sort of 500 ticks up towards this previous sort of congestion area. If we look to this chart, and I can't ignore this, there is potential for maybe a spike lower, move up, head and shoulders, but at the moment we are reacting close to the 88.6% pullback level. So I'm hoping that I might not have to endure too much pain. I've got an original stop under here. I've now got a floating stop under here around about 120.30. But when we look back on the dollar, because obviously we're looking at the dollar and the Canadian dollar, the dollar index, I think this one might be the one that saves my bacon. So if we look to this chart, this is the daily chart. I'm looking for a move all the way up here in the dollar basket, 88.6%. If you've watched some of the videos before, we've been talking about this for a while. Looked really desperately looking for a reversal pattern, and I think we've seen that overnight. So head and shoulders, we've had a breakout, we've had a retest, and now we're starting to move higher. And I think that's basically what's holding up my Canadian or my dollar CAD bullish bias, not the Canadian side of it. And here we've got at least a move to that level, but I'm looking for that to be a basing formation, and hopefully that will project the dollar a lot higher. Obviously, getting in towards those CPI figures this afternoon, you could put your stop in a little bit tighter from where your normal levels would be. Let's have a look at sterling, because this is the other pair, or the single currency I should say, that's tweaking my interest this morning. 361.8% extension level. It's uncommon for sterling, but in single currencies, what I've noticed is we can go to 361.8%, and we can go to 423.6%. This is the pattern that really sort of has me interested, is here between the 88.6, which is here, and the 127.2% will form a bearish pattern. So I think there's limited upside. Sorry, I do apologize. 78.6% and 2004. So that is basically coming off the 61.8% is a Gartley formation. So I think limited upside for sterling, and that brings me on to sterling Aussie. And when you're looking for these trades, what you should be looking for as well is not just the immediate cipher. You should be looking at higher time frames to see where you are in a potential cycle. So in other words, this is what I'm looking for in sterling Aussie. Got a beautiful Gartley here at 81.55. I think we might project through it only due to the fact that we haven't got any reversal formations or exhaustion counts on DMARC as yet. So I've got an alarm on here, as you can see, and I'll be looking for reversal patterns around about 81.55, 81.58. So that is the 8-hour chart. But what's the big picture telling us? And this is a trade that I wouldn't like if I just was looking at fundamentals, or if I was looking at bias, because I do believe stocks are going to come off. If stocks come off, then Australian dollar has a tendency to move lower. If Australian dollar moves lower, then sterling Aussie should move higher. So it is against that risk appetite outlook. But when we look at this pattern here, this is the daily chart, we've easily got scope to move lower. So I will be using a relatively tight stop, and then I'll be focusing on these two levels here, 176.05, 175.21 for a move to the downside. And it's always worth just putting, if you've got a trading view chart, it's always worth just putting a open trade calculator on it. It gives you what your risk reward would be, and above that swing high there, focusing on this 78.6% pullback level, it's going to give around about 7R. So entry at 131.55, and I'm not telling you to sell there, with a stop at 182.82 offers pretty reasonable risk reward. One thing I should also say is that apart from sterling dollar, there's not really a lot of other currency pairs that are looking negative for sterling. Let's have a look at sterling against the US dollar. I think this is very interesting on a long-term basis. We hit a 38.2% extension on that, retracement on that first move to the downside. That sometimes means that we extend all the way down here to the 361.8%. So catching this wave here can be extremely beneficial. And again, you could get a double whammy here. You could get a turnover in sterling, and you could get a turnover in the dollar if we get that figure, that CPI figure out this afternoon. But really want to look at shorter time frames. So here we've got, let's just pull this in. We've got a cipher pattern here, okay, 141.75. If we look to this time frame, we've got the potential of a head and shoulders. So left shoulder, head, forming a right shoulder, maybe up towards sort of 140, 155. But I think essentially, if you're going to play that figure, you're going to have to look for a break of 140, 108 to start this move lower. But like I said, if you do catch this head and shoulders, and if it is correct and it holds, then look at this big picture. 5 waves to the upside. This is just start of the correction lower. So you could see a really decent sustained move lower, I believe, in sterling and sterling against the US dollar, as opposed to sterling against Aussie dollar, which I think will be limited to the downside. Okay, guys, I hope that all makes sense. If it doesn't, please leave some comments on the YouTube channel. Please follow me if you have time, Ian Coleman. Okay, guys, good luck today, and I'll speak to you again soon. Many thanks.